Hey, Gemma, good morning. No, not good morning. Good
Oh,
afternoon now, right? Huh.
shall we get started?
Let's get started.
Hi, all. I'm Jemma Jorel Lester with Proper Pour Co. And I'm so excited to have with me today Julie Rad from Sensiba LLP. She's so graciously offered to come in and talk about hospitality, business, bookkeeping, taxes, best practices with that. So, welcome to the business side of the bar, financial strategy for hospitality operators. I'm so excited to have Julie Rad here with me today. Julie, welcome.
Thank you, Gemma. I'm Julie. I've been in the public accounting for well over 14 years. So it feels much longer than that. Really nice to be here.
Julie and I met a couple of weeks ago through our professional networking organization called Provisors, and she's experienced with doing taxes and tax strategy for hospitality businesses. So I'm really excited to have her here to dive in on some of the common questions and issues that hospitality businesses have. So let's get into it.
Before we dive into the details, I just want to have a disclaimer there because we are only going to provide some general information today. All the tax situation, all the business are different, right? So therefore, you definitely want to consult with your own tax advisor before you make any decisions.
Find a good one like Julie to make your business very strong. I've been working with hospitality businesses for 13 years, and one thing I've observed is that they're quite unique. People start these businesses to make money is maybe the third priority. So I like to bring people's attention to other ways they can make a stronger business. It could be profitable, sustainable, and even sellable. So tell us more about this, Julie.
There's so much to cover, we are only able to touch upon a couple of items today. From the very beginning of your business operation, including the entity selection will be important as well, very important as
What
well. Along with that, you need to have some strategy there because tax liability and your financials could easily translate into real dollars and the decisions and strategies as well, and takes time. They take time, so definitely we want to think ahead, think long term, and think holistic. And fit and no planning can really hurt, right? Can really hurt, can be really costly.
So many of these businesses are very creative, very intuitive. So I think a dose of reality in terms of taxes can be really helpful. So I really wanted to talk to Julie about entities because that's an important decision that a business owner makes as they're starting, the licenses. So, Julie, will you tell us more about these entity types and why you might choose one over the other?
Very happy to be able to share about the entity choices. We list a couple of the entities or types here. These are pretty common ones. The first entity choice is really, really important. That's because each entity type, they have their own tax characters. Therefore, the strategies and planning should be all different. For example, the individual sole proprietorships, there's no real legal entity there. But we know the reason having legal entity, the number one reason is to protect the owners or legal protections. Everything that happens, people shouldn't be able to go after your assets. So that legal protection. And then the second consideration will be the tax characters. Partnership and S corporations, they are pass-through entities. So it's really easy for the closely held businesses to coordinate and plan with the business income with the individual tax situations as well. C corporation has its own legal protection purpose, but it has double taxation, right? So that's something you want to check with your CPA. LLC, great one there, but LLC, LLC can even elect to be a S corporation or C corporation. All these, the owners or decision makers need to be aware before they elect the entity type. For example, you really do not want to put a real listed property into C corporation or S corporation for good reason. Yeah. Elect the right entity type for the right business from the very beginning. Down the road, you may have an opportunity to change, but it can be costly and time consuming.
That was such good points you brought up.
Mhm.
One thing I see a lot is that, for example, if somebody owns the property, they'll put the property in an LLC and the business in a corporation. Or I've had some people convert LLCs to corporations or vice versa. ABC makes it a little easier to go from individual and partnership to a corporation. It's a little bit cheaper, but it's a consideration with your license as well, because if you're making a change from one kind to another, that needs to be reported. When you have different investors, these corporations or LLC options can be really good for dictating the terms of the business and who
Mm,
owns what and who's responsible for what. And I've seen a lot of dissolving businesses really rely on their operating agreements or partnership
yes.
agreements, disband without killing each other, basically.
Yep. Have this all planned out so avoid the awkward situations down the road.
Plan it when you like each other. That
That's
is
true.
a good business strategy. I know a lot of people don't think about bookkeeping or taxes until it's probably too late. So tell us a little bit more about best practices and how people can prepare for tax season.
Yes, wonderful question. People tend to think about the taxes or accounting books towards the year end, right? So accurate and complete accounting and bookkeeping are really, really important because you want to open your books, you want to know where you stand from very beginning, right? It's also important for your decision making, where you want to take the business to as the next step. So for that purpose, that's a practical step. And also the financial and books are the important starting point for tax preparation, tax strategies. If you don't have the right bookkeeping or accounting, you can miss out on opportunities. Your decision making might be going
Mm,
toward the wrong direction. And if you want to have a complete and accurate accounting, you may want to start with the right business accounting standards or procedures. So you capture the right items the right way.
mm.
And one thing I do want to mention that do not mix your business with personal items. We see that a lot in our practice. Not really a good idea. In the face of audit, IRS audits is really hard to back up your position. Year-round consideration should be contemporaneous task, should not be something you would only come to your mind toward the year end.
Especially when business is so busy, October, November, December, you don't want to be thinking about holiday parties and catering and everything, and also getting in trouble with your CPA because you didn't track things properly.
And when it comes to year end, people tend to want to have some year end planning, right? Without accurate books, it's really hard to plan. If you plan, it
Yeah,
might be a wrong plan for you. Yeah.
good information.
Right. Sometimes a business choose to have internal accounting. Sometimes it might be a good idea to outsource the task, right? You want to evaluate
Mm,
how much is the cost versus benefit. I do want to mention one thing about the payroll tips and overtime with the One Big Beautiful Bill Act that was passed on
yes.
July 1st, 2025. There is a new provision that came into being related to tip income and overtime income. As the employer, it's your task to be able to capture the tips and overtimes and report it correctly and timely to your employees so they have the information for their use. It's your responsibility as the owner. As of 25, the W2 reporting has not been so strict, but going 26, which is coming very soon in 2 weeks, right?
Yes.
You should be ready. Yeah.
Yeah. And this is
Mm,
the best practice so that your employees aren't overpaying in taxes and keeping them happy so they'll stay and
yeah.
continue to take good care of your customers.
Yeah. And also as an employer, it's really hard for you to go back and get the right data if you don't have the on contemporaneous and ongoing record.
Get the good systems in place in January. Okay. Tell us
So
more about thinking long
mm,
term about our business and making it sellable.
when you start a business, you may want to start to think of the day when you are ready to sell the business. Think that's part of the thinking long-term plan. For ABC licensees, from the time they have acquired a license, they may want to think what kind of costs they can capitalize and get a deduction either as a amortization down the road or depreciation down the road. Or they will want to think whether they want to purchase a facility or lease the facility and to what kind of cost recovery is best for the operation for the business. And we'll have a later slide on depreciation, especially those provisions under the One Big Beautiful Bill Act. Another factor people want to think is how you want to fund your investments, your business. Are you going to
Mm,
borrow from the bank? Or are you going to have investors, internal investors, outside investors? And are you going to have the equity, right, funded by equity or simply debt? So all these factors need to be
mm.
in part of the plan.
This is something I talk about with people at the beginning too, because a lot of investors don't want to be qualified with the state ABC. There's certain thresholds where they need to. There's disclosure down to the ultimate beneficial owners. And so structuring a business so your investors are happy, that's still legal, but it doesn't require people to disclose more than they're comfortable. These are all things to consider as you're building your business, picking your entity type, and figuring out your money.
And the entity structure, as earlier we mentioned about the entity types, it is pretty common to see tiered structures. So you may
Yes.
have one partnership, right? And they owned by another partnership, and then another partnership eventually might be owned by a trust or individual. So it's pretty common there.
That will reduce some of the exposure on the tax side. But just to point out, ABC does look down to the ultimate beneficial owner.
Mhm.
So there's no way of hiding people ultimately from ABC.
Yeah, it's good
All
idea
right.
to involve the attorneys, right, when you set up the entities and work along
Yes.
with the advisors like you, Gemma, and the CPAs as well. So we work all together to figure all these things out from the very beginning to save a lot of headache down the road.
Yes. We're all about saving headache down the road. I know that's where Julie and I are aligned as they go to sell the liquor license and or their business. How is that reported to the IRS? So tell us a little bit more about liabilities from the sale of a business.
So let's take the license first. When you acquire a license, initially it's required to be capitalized and amortized. When you amortize, you get a deduction over the years, and then that deduction in the form of amortization reduce your basis. So when you sell it, the appreciation part compared to the adjusted basis, that's your gain. The gain is reported depends on what kind of entity. If the C corporation flat 21% rate, if it pass through, eventually it's going to end up in the owner's hands to be reported there. And depends on the owner's tax bracket. It depends on how much it's going to be taxed on. That part again, when it comes to license, if you have a building or facility and you receive a depreciation, that's your deduction over the years. Same kind of a logic there, but eventually you will have a little gain. In the unfortunate case, if you have a loss, that might be another consideration, but likely you will receive a gain and you need to prepare for cash flow purposes, right? When the
Yes.
gain comes around. This is the case when you are selling the assets, the business, the assets. If you are selling a business ownership, for example, if you are a partner, you're selling partner
Yeah.
interest, or if you
Yes.
are selling a C corporation stock, that's a different. There are different strategies when it comes to the gain, right? Different strategies, including maybe you can consider opportunity zone, 1031 exchange for real properties, or qualified opportunity zone, or installment sale, that kind of planning strategies. It all depends. But don't be afraid when the gain comes around for you. There are strategies to help you out.
It's so good to involve someone who knows the options here. This is another area people don't plan for as much as they could.
Please work with someone, work with Jemma, with your tax
Yes.
advisor. It's important.
Finally, I'm going to let Julie shine, get into the weeds on some of these provisions of the one big beautiful bill as they relate to hospitality. So tell us more, Julie.
Gemma, I need to request 2 days on this section.
All right. I hope
So,
everybody's like settled in, get your beverage.
yeah, have your strong coffee right next to you.
Yeah. Or your
Okay.
martini. I don't know, whatever you need.
Okay, so bonus depreciation. That's number one on this slide. Under the One Big Beautiful Bill Act, the one bonus depreciation is restated to be 100%, meaning that if you have 100,000 qualified property, you can get deduct 100,000 right away. That's a large deduction right away, right? So people want to get the deduction so they get a cost recovery faster, better cash flow, better cash in hands, and then therefore you can do other plans and have invest other things. That's always
Yep.
a good thing to have a deduction up front. But later on, we'll talk about some limitations there. That's a bonus depreciation, but it doesn't mean you get to take the deduction on everything. There has to be certain qualified properties. Your CPA should be able
Okay.
to tell you about those. One more unique character about bonus depreciation that you have to take it. Otherwise, you lose it. Okay, it's a elect in. You take it or lose it. Okay, that's it. If you don't want to take a bonus depreciation, you can elect out, but you have to some attachment to your tax return specific statements there.
Mm.
The 179 depreciation is another form of accelerated depreciation people can enjoy. And the maximum amount of 179 depreciation you can take is 2.5 million under the act. It's a pretty large amount for most people, most taxpayers, right? The 179, you can do cherry picking. You can elect 179 on this one, not on that one. If there are options, that means planning opportunity. Depends on where you go, right? If you are selling the business a second time, maybe you don't want to take a large depreciation on the properties. So you will have a large gain which can be recaptured there for ordinary income. The third bullet on this one, the qualified production property, is really, really big thing, really big one. That's a brand new section, but it only fits into certain situations, certain manufacturers or producers. One caveat for this one is if you are restaurants or bars, likely this one won't fit into your situation because food and beverage is prepared sold on site, do not qualify for this. But if you qualify, if you are manufacturing, if you are producing, you can get a 100% deduction on the facility, including the building, right away. But this
Mm.
one, it has to be a long-term plan. If you stop being the qualified manufacturer, you have to pick up ordinary income within 10 years. That means it's ordinary income to you. So you have to have a long plan, decide to stay there at least more than 10 years. So you won't have to pick
Okay.
up income. Yeah. And the
Good.
others I will quickly brush through the R&D, that's a research and development cost. R&D doesn't have to be fancy. It can be some simply improved process. Can be new
Mm.
process, old process. If it's improved process, you can qualify for R&D. If it's R&D under the act, you can start to get a deduction right away. In the past, you have to amortize and capitalize and amortize. And in the meantime, you can get R&D credit for the federal and state side. Don't miss out
Mm.
the opportunities. The QBI, that's for business, qualified business income deduction. Any business other than C-Corp person can qualify for this one as long as you meet a very minimum threshold there. Pass-through entity tax is another one. We call it PTET, but only fits for pass-through entities as corporations and partnerships. So this is the time people really need to think about the entity choice one more time, see which
Mm.
one works for you. Under the Act, there are a lot of things can be really beneficial if they fit into your situation, if you understand what they are and you have a good CPA to help you out. Last but not least, I want to remind people there could be surprises if you're not aware. The last two limits is the interest expense limitation. If you take out much loan, it's a good chance you may not be able to deduct all the interest, at least not for the year. And excess means loss limitation. You're able to take a loss of depreciation deduction, but if it threw you into loss situation, there's a good chance you may not be able to utilize loss, not the full loss. So all these there's a lot of things in the interplay to help someone to help you out.
Hire Julie is the bottom line. There's a lot of things to consider, and they're changing pretty regularly.
Yeah.
So I just wanted to highlight our beautiful guest here, Julie. Tell us a little bit about yourself and your background as a CPA.
Thank you. It's a really nice opportunity to be able to share a little bit myself. A lot of time I think, oh, tax is over, now tax is over, right? And unfortunately, too many changes out there to keep us up at night. Even
Yeah.
working in the tax field, especially I work closely with a real estate manufacturer distribution as well as professional services, help with the tax compliance, basically tax preparation. And I like to stay way ahead of that to form a team with Jemma with other professionals, including their attorneys and financial advisors and bookkeepers, so we can form a team to help each other watch out all the angles for the business owners. So they have the best positions and they feel good about their business. So they can put their own energy to do the things that they are really good at. So they need to worry about the taxes if they don't have to. That's not most exciting thing for most people.
You have to find the experts in every field. And I just am so happy when I know that my clients are working with someone like you because, like you said, they're busy running their businesses. They don't really have time to stay up on all of these changes and also best practices. So, Julie's contact info is here. I'll also have it listed below, but give her a call or email. She's amazing. And just wanted to highlight some other guests that I have coming up. The more you can surround yourself with really good people that want you to succeed, that know their skill set. I'm going to be sharing an interview with Julie Agata of Moses Rose Law coming up soon. So stay tuned. And we'll just wrap up here. Our info is attached. And Julie, any final words for the people?
I really appreciate the opportunity, Gemma, and you and your clients. They are in great hands with you, and we're happy to be here to assist in any way. Thank you.
Thank you so much for being here, and we'll see you all soon. Obviously, a lot of what you said is above my pay grade, but it was enough to get people's attention and hopefully get them a little excited about preparing better.
And likewise, your expertise is way beyond my pay grade, so I'm going to rely on you on those as well.
So I'll let you know when it's posted, and
Mhm.
yeah, have a great rest of your day.
Thank you so much.